Good afternoon, everybody, and welcome to Phoenix Trading Strategies. It is 1:45 Eastern Time right now. Today we're going to talk about how decoding market makers' volume and price action in the FX markets. See how we made over 700 pips today, right before the European Central Bank announced their quantitative easing program. We invite you to come to our website, www.phoenixtradingstrategies.com, so you can see the type of technology and software that we are using, which is cutting edge and state-of-the-art for retail traders. Unmatched by anything out there, you will find that trades like this you could have taken last night and made 700 pips on 4 trades with one standard lot. So before we go any further, let's go to the disclaimer. Future stocks and spot currency trading have large potential rewards but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the future stocks and forex markets. Don't trade with money you can't afford to lose. This presentation is neither a solicitation nor an offer to buy, sell futures, stocks, or forex. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed on this website. Past performance of indicators or methodology are not necessarily indicative of future results. So here is our website. We want to invite you to come to our website, read about everything that we have to offer. We believe that we do offer strategic knowledge and information that allows retail traders like yourself to trade successfully. Make no mistake, this is a financial war and you've been given no advantage. One could even say you've been sabotaged. Phoenix Trading Strategies has been created for the purpose of helping and teaching forex and currency traders how to beat the odds in the cyber tech war using the power of price and volume analysis with average true range stops. So welcome. For those of you that have never been here before, I want to walk you through the website real quickly before we go to the charts and before we go to the trades that were taken last night. So for those of you that have never joined us before, you can go to our free trading room and sign up. We offer it Mondays and Fridays from 9 a.m. to 10:30 a.m. Eastern. Sometimes we go as far as 11 a.m. And we look for trades. We look to see the trades that happened in the past and the ones that are setting up for the future. So it's very nice to see that. You can also go and take a look at our trading indicators and see the type of technology that we use. It's very simple to use, the packages that we offer. You can look at our volume indicator, our power dots, and basically read everything that describes how these power dots work. You can also go to our blog. The blog is very interesting because we basically put up videos of trades that we've done in the live trading room, which you'll like. We also put up in the blog the latest trades for you to see them. We're going to be putting up these trades later on this afternoon, and trading videos that we've done in the past. We did a special webinar on last Friday on how volume identified how the big boys were reversing prior to the Swiss National Bank tsunami. And we show you how our technology actually identified those trades an hour to an hour and a half before they actually unfolded. But today is even more interesting because today you're going to be very excited to see how we were able to identify the 4 trades that we took last night on the Euro Pound, Euro Aussie, Euro Dollar, and Euro Yen. So I look forward to sharing those with you real quickly. In the meantime, we're going to take a small pause and we'll continue. So this is what the European Central Bank had to say. You know, this is an article that came out in Leap Rate. They call it Black Swans and White Elephants. European Central Bank's Mario Draghi announces plans to buy 60 billion euros a month of euro debt until September 2016. Now, he had originally announced, as you all know, that they were going to buy 50 billion euros a month, but they decided to increase that after what happened with the Swiss National Bank basically removing their peg from the euro and allowing it to free float, no longer supporting the euro at 120. This was literally a carnage and a tsunami that happened last week. However, because of what happened and the quantitative easing program that they initiated right now, we're going to see a tremendous amount of volatility and opportunities to trade. So you're going to see that in these trades, because rare does it happen where in one night someone can make over 700 pips. But today we're going to show you that. So we're going to go to the charts in a moment, and we'll continue there. Okay, great. Let's go to the charts now so that we can see actually how these trades unfolded. We're going to first look at the euro-pound, because the euro-pound was actually the one trade that excited me the most, and I'll explain why. In actuality, this one was really unique because, as you can see, my entry was here, and this was about approximately 2 a.m. in the morning, and in the morning Eastern time. As you can see, I sold it at one standard lot at 0.7655. I put a white arrow to identify it, and then I ended up closing this order this morning, and on my chart it appears on Pacific time, but it was about 11:30 a.m. Eastern time. Now, the unique thing about our technology is that we are unorthodox in every level, and we analyze things from a volume and price perspective. Now, most people out there can say, well, you don't really have volume in the Forex market. You're right. There is no centralized exchange. So what we've done is that we've synthetically created volume to identify these price levels where the market makers are actually trying to induce traders and trick them to go in a direction that they are not. So what we've done is that we use our market analyzer with Ninja, and the market analyzer, we have it set on the 15-minute, and it identifies, as you can see, some of the trades that are setting up. When it says analyze me, it means that the power dots are starting to form. The gold dots that you see here are power dots, and what they do is that they actually identify those price levels that the market makers are currently using in this specific day, and they adjust every day. The fascinating thing about our technology is that our technology is unique from the perspective that what we do is that the algorithms identify volume and momentum that's going to be driven into the market. Now, I know that most of you use most common indicators out there, stochastic, RSI, MACD, moving averages, and I have moving averages here. The white one is the 100, the aqua is the 50 EMA, and this brown one up here is the 800. And I put them here because I wanted to demonstrate to you that many times as traders, we try and find similarities that would lead us to make a decision, but realistically, one of the things that no one out there has is an indicator that actually identifies when there is volume and momentum that's going to be driven into the market. Phoenix Trading Strategies has created that indicator, and that's what the power dots do. Now, granted, you can say, well, the volume is very low. Our volume indicator is different and unmatched by any other out there, and I'm going to show you why. Because one of the things that we did is that we were able to identify the total volume in these specific bars to give you the real picture of what's happening inside. Now, for instance, as soon as this dot appeared, and it appeared right below this level, which was in actuality, give me 1 second, let me correct this. This level was about at 0.7670. As soon as these dots appeared below that level, and I saw a pivot, I knew this pivot right here, this purple dot, I knew at that point that they were starting to manipulate their volume. Now, here's how it goes, and I'll explain to you briefly because, you know, you're really going to learn this when you come to our free trading room. What happens is that, see this dot, as soon as it formed, I was able to locate and detect, number one, how much buying volume and selling volume there was based on the volume activity that they report to the aggregator, to the broker-dealer that is represented here in the charts. Now, you're going to say, but this candle is very small. You're right, it is, and we're going to go over that because you're going to see volume that you've never seen before. Now, the total volume in this specific bar, you can see up here where it says volume right here. This one had a total of 102.5 million. But you can see here in the bottom, buying volume, selling volume, and cumulative, you're going to see that we've been able to synthetically create the volume activity that they are using, because our theory is based on what I call currency portfolio rebalancing, where they are rebalancing and offsetting their long positions to go short, or if they were going short, their long positions, their short positions to go long. But you can't really see it from the human eye. What is so fascinating about this market is that the market makers have counter-programmed a lot of indicators and information, even the way they report their volume activity. So what you're going to learn today is very unique, because this is why we were able to place these trades, identify the trade opportunities, and make over 700 pips. So here's how it goes. This dot right here, as soon as this one formed, it basically told me that they were offering 66 million on the sell side, 36 million on the buy side. So there was a difference of 30 million. Now you can see this candle is very small for that amount of volume. Nothing. Previous candle, the next candle here, they were offering on the buying side 71 million, on the sell side 49 million, a difference of 22 million. Now with that type of volume, do you not think that this candle would move? This candle had more volume than this previous one, and it didn't move. Let's look at this one previously before it. 64 million on the buy side, 43 million on the sell side, 21 million, and it didn't move, did not in any form or manner challenge this price level up here where I identified this red line. This previous one, 46 million on the buy side, 49 million on the sell side, a difference of 3 million, and nothing, no movement. Now, my entry was here. Why? Why did I enter here? Because I knew that they were no longer planning on challenging this price level. And what they were doing is that they were rebalancing their long positions and about to take short positions. So what happens here is that they're announcing to you in advance, before the actual trade took place, because this trade actually took place, and I'll identify the time that it did kick in. This trade actually took place at 4:30 a.m. Pacific, which is 7:30 a.m. Eastern Time. Now, I was in this trade here. This was 2 a.m. Eastern Time. So that means that I was in the trade practically 5 hours before the trade actually unfolded. But that's not the most important thing. The most important factor here is that we were given notification that this trade was announced that it was going short literally at what is considered 9:45 p.m. Pacific Time, which is considered 12:45 a.m. Eastern Time the night before. That's what's so incredible about this, that we were given notice hours in advance before this trade, before the Euro Central Bank announced it. And that is why Phoenix Trading Strategies is very effective. Now, you're going to say, okay, so you sold here and you sold here. Well, what was the end result? Good question. I'm going to show you that right now. I'm going to show you a 10-minute chart, and I'm going to show you that at the time, right before I closed it, on one standard lot, I had made 108 pips. Now you can do the math because you can read it right there. And I'm going to make this a little bit bigger for you so you can see. Where was my entry? Same location, nothing different. Where was my exit? It was going to be right here, because this is where my entry was, as you can see, and this is what you would have made if you would have put one standard lot trade. Interesting? Let's continue. Let's look at the 15-minute. The 15-minute is just as fascinating. Why? Because you can see the same thing. It's the same outcome. You can't go wrong. The information is just valuable. You had the power dots form here, and then you had another set form below this level, below this price level. This was a slam dunk. You had a pivot here literally announcing this pivot is a reversal bar, that they were no longer going to go long, and they were not going to challenge this any further, right before the announcement by the European Central Bank. But we had a 4-hour over a 4-hour window. Yet, you could have still gotten in this trade right here, which would have been literally 30 minutes before the announcement. That is a lifetime of information. And if you would have used our volume indicator the way we use it, you would have been able to comprehend and understand the volume here. Here, look at this. This candle right here, you can see the volume. Let me bring this over because it's very fascinating, and you guys really got to see this. A half hour beforehand, the volume in this bar, in this little bar, okay, because it didn't really move. Look at that. On the buy side, there was 136 million. On the sell side, there was 220 million. There was a difference of 84 million that they were shorting. This next bar right here, 252 million on the buy side, 251 million on the sell side. Wow. And then let's look at this bar. 194 million on the buy side, 312 million on the sell side, a difference of 118 million, and it just crashed when they came out with that announcement. So, did you have enough information to make this trade? Yes, you did. But because this trade, this currency pair allowed us to see what was going to happen with the other euro pairs, this was our leading indicator. Now, mind you, we got into this trade at 2 a.m. in the morning Eastern Time. So let's take a moment to pause and we'll continue with the next chart. Alrighty, so here's the euro yen. This was also another fascinating trade. Again, previously on the 30-minute we had identified this price level, which was unique because it identified in actuality that they were not going to go above this any further. So if the market makers are adjusting and setting up their trade plan, we saw it hours in advance that they were not going to break 137.30 on the euro yen. So they were not going to trade above it and they were going to go right below it. Now granted, I have these moving averages here. Again, you know, the cayenne is the 50 moving average, the white one is the 100, and then the brown one here is the 800. At any moment in time, would you have made that decision to take this trade? I can tell you that the answer is no. The moving averages are lagging, and they don't give you all the information that you need. So our technology identifies these price levels because that's what the market makers are doing. And so we're able to tap into and decode their volume and price activity the way no other software out there does. Now, here's the interesting part. We started to get these dots here. Now, what's the difference between the dots forming here and forming on top? Very interesting. As you can see, we had a transition here from these dots, which are basically the trend dots. This is a trend stop, these little ones right here. And these basically form when there's volume and momentum that's going to be entering into the market because they need to rebalance their book and rebalance their positions. This is what's fascinating and interesting, that we were able to detect this hours in advance before the actual trade took place and before the announcement. So the question is, you know, can you take this information and make it work for you? The answer is yes. We got the announcement here on the 15-minute time frame, and this was approximately, not 2, not 1, it was about 12:15 a.m. Eastern Time. Now, our entry was here, and this was at 2:15 a.m. Eastern Time. So we waited for all this time, but we had hours notice. Now, again, we had also identified the level here, 137.30, that they were not going to trade above and they were going to trade below. So as soon as these dots formed, then at that point, I knew that they were going to be trading around this price level, and this trend stop right here was telling me that they were not going in any form or fashion to even come up to challenge this price level any time soon. So when the volume kicked in, I was able to analyze and determine what their volume activity was. This candle right here showed me that they were going to rebalance 110 million on the buy side, 104 million on the sell side. Are you kidding me? We're talking about 6 million, and this candle didn't move? This next candle, 129 million on the buy side, 127 million on the sell side, and nothing? Let's look at this one here right after my entry. This one, 252 million on the buy side, 270 million on the sell side, and this is all it moved. Now granted, everyone was waiting for the announcement. But the nice, fascinating thing about the technology is that we had already been given notice that they were not going to break above this level and that they were going to trade below, because if the announcement came out and it wasn't good enough, they were going to short it, which they did. What was our outcome? Our outcome was very good, because at the end of the day, this is what we ended up with. This is the euro-yen. Our entry was here, as you can see. I'll make this a little bit bigger for you guys to see. And this is what you would have ended up with if you would have put a standard lot, which is what I did. I ended up closing out right here. I'll also show you on the 15-minute so that you can see, because on the 15-minute I actually waited a little further and then I actually got out with a little bit more pips. And this is just one standard lot. So you would have made 195 pips on this trade. 195 pips. But you would have been in this trade hours in advance before the announcement, because the market makers and the banks had already made the decision not to trade above 137.30. That's what's so important about this. And that's why you guys need to come to the trading room, because you're going to learn so much more about volume spread and volume price analysis that you'll discover that what we have given you and what we are providing you with our technology is the final frontier. You made it to the finish line. Let's continue. Now here we have the Euro Aussie. Also another interesting trade, because on the 30-minute we were able to identify, the power dots identified this level, 144.19, that the market makers in no way or form or fashion were going to attempt to break this, because if they did, it would trigger off all the other algorithms and it would initiate a buying frenzy. So what they decided to do instead was basically trade below it, and I'm going to show you why my entry was here, but I'm going to show you that here in these two bars, the volume was just off the charts. It was incredible. And I was actually late in the entry here, but it didn't matter, because I knew that they were going to bring it down, and then this confirmed it at around 5 a.m. in the morning, because it confirmed that they were not going to change their decision process, and that in no way or fashion they were going to trade below 143.71, even though they had already made a decision not to trade above 144.17, but 143.71 became the next level, and that's when I knew at that point that it was going to go short. But I had entered here prior to the power dots forming here, because I saw the transition here. So once I identified the level, I just had to go to the volume, and as you can see here in these three bars, let me show you. This bar right here had 137 million on the buy side, 106 million on the sell side, a difference of 31 million, and you're not going to challenge and break above this price level? Really? Look at this one, 98 million on the buy side, 72 million on the sell side. They started to pull their volume away. And then finally this one, 110 million on the buy side, 101 million on the sell side, a difference of 10 million, and you're not going to trade above this. You're going to be a bullish, you're going to be a bearish bar, a bearish candlestick with bullish volume. Now you can see how the market makers have manipulated the way they report their data and how they rebalance their orders. They're rebalancing their orders on these small candlesticks, which are now high frequency bars, not these. So when you see that, when you see these small little candles here forming, this is when they begin to rebalance their order flow. This is what is so fascinating about Phoenix trading strategies. Now granted, yes, I got in a little late here. It didn't matter, because I saw the transition, which was no longer bullish to bearish, and I also saw these power dots form. Even though they formed below here, I knew that at the end of the outcome, it had to come short. So it did. Did the moving averages change my decision or help me decide in going short? No, they were useless. Why? Because moving averages are dependent on price action, not volume. So if the candles don't move, then neither do the moving averages. That is what's so fascinating. So here, for instance, my entry here was literally at 2 a.m. in the morning. As you can see, I sold one standard lot at 143.39. Didn't really think twice about it. Let the trade run. Came back at, this was 1:45 a.m. Pacific time, which is, if I'm not mistaken, 4:45 a.m. Eastern time. The first power dot formed, and then I knew that it was over. Because as soon as the second and third formed, I knew that this was the next price level that was identified by the bank's algorithms, which was 143.73, and that they were not going to trade above this, because if they did, they had to come up and challenge 144.18. And if they come up and challenge 144.18, every other algorithm out there would trigger a buying frenzy, which they did not want, because they didn't know what the European Central Bank was going to announce. Now, fascinating about the power dots here is that then you have these pivots forming, these purple dots right here, and so as soon as it formed right below this line, I knew it was over. But look at this, you still had one more entry, and this was at 6:45 a.m. Eastern. You literally had, right before the announcement, you had an hour and 15 minutes to get in on the Euro Aussie. Now, you're probably saying, okay, your entry was here and your exit was here. What was your outcome? Here it is. The outcome of this, one trade, one standard lot, 204 pips. So that means that if you were using our technology, you would have made 242 pips on this trade. There's a dollar amount, but at the end of the day, it comes out to, can you make the final decision to enter a trade where there is uncertainty? And what we do is mathematically remove fear and uncertainty from your decision process, because we are decoding their volume and price activity like no other. Our technology is state-of-the-art, and we're helping retail traders like you succeed. So hopefully you'll join us and become a part of Phoenix Trading Strategies. So you can see you had plenty of time before the announcement. Hours in advance, we knew that they were going to take this short. Hours in advance. So let's go to the next chart and continue. Okay, this was our last trade, the euro dollar, which everyone has been concerned about because of what the Swiss National Bank did last Thursday, which basically caused a tsunami in the Forex industry. So everyone was expecting that the change in monetary policy by the European Central Bank would actually help the euro from not collapsing any further. Unfortunately, that wasn't the case. So what happened last night, based on our other three trades that we did, is that our algorithm identified that 116.48 was the price level that they were not going to break and not going to trade above, because if they did, they would trigger a buying frenzy. They had already made the decision hours in advance that they were going to take this short based on the quantitative easing program that the ECB was going to initiate. Our entry here was the last one, and it was at 4 a.m. Pacific time, which was 7 a.m. Eastern time. You can see the price that we sold it at, 116.27. Again, what was fascinating about this trade is that we already knew the level here. So all we had to do was just basically go look at how the volume was working out. You know, based on my entry, I looked at this previous bar. I saw, okay, not a lot of volume, you know, quite a bit of volume at this level. 161 million on the buy side, 92 million on the sell side. A difference of 69 million, and you're not going to break above this price level? Are you kidding me? This was a flat. Literally, it wasn't bullish. It wasn't bearish. It was just flat. And you have all this volume? I mean, really? This bar right here where my entry was, 208 million on the buy side, 166 million on the sell side, a difference of 43 million on the buy side, and they could not trade above this price level, 116.48? No, not in today's date. So what we have done is that we've synthetically created their volume, because there is no centralized exchange for Forex. I have to be honest and be truthful about it. When I was a broker, one of the things that we were told is that there is no way to quantify volume in the Forex market because there's no centralized exchange. They're right, until now. And so that's what you're going to get. Here was my exit. What is the outcome? Let's take a look at that. And you can see how the volume just increased literally when they announced the quantitative easing. The volume just blew up. But this is what the outcome was on this trade. At the end of the day, we ended up making 210 pips on this trade. The question is, did we have all the information correct? The answer is yes, we did. Here's the 15-minute time frame so you can see it as well. You can see what price we sold it at. And here's where we ended up closing it at the bottom. So at the end of the day, were we able to provide you with information that would have allowed you to enter this trade, determine with time your risk parameters, your stop loss, determine with time your exit? The answer is yes, we could. And that's what we offer you. So we invite you to come to Phoenix Trading Strategies. We invite you to join our free trading room. It's free. You don't have to pay anything for it. But one thing is that when you come, you're not going to leave, because the information that you're going to get is the most fascinating information you're going to discover when it comes to volume spread and volume price analysis. You see, unlike others, we have the right tools, but more importantly is that we're finishing the game, because we are the final frontier for this type of information. So I hope that we're able to help you. So come and join us. Finally, here's your roadmap. Here's where we conclude, and we look forward to seeing you at Phoenix Trading Strategies. To sign up for a free trading room, this is the link. To sign up for our special today, email us at ricardo@phoenixtradingstrategies.com, and you can even have access to my Gmail. And we will teach you how to trade the Phoenix trading method. This is probably the most fascinating method you'll ever come across, and the most fascinating type of software and technology that you'll ever use. If you want to contact us, again, here is our email, our website, www.phoenixtradingstrategies.com, our emails, phone number, and we want to thank you so much for joining us today on the day that we made over 700 pips right before the European Central Bank. Have a great trading week, and good luck.